right, I think we're live. Okay, good afternoon, everybody. Welcome to the Audit Committee meeting. I am the chair, Ross Appel, and I would like to ask Councilmember Shealy if he would be so inclined to offer us with one of his invocations. Thank you.
All right. Thank you, Mr. Chairman. Let us pray. Dear Heavenly Father, we thank you for all the blessings of this day, Lord. We ask that you'll guide us today and help us to do the very best for the citizens of Charleston, the employees of Charleston. For it's in your name we pray. Amen.
Amen.
Thank you, Councilmember Shealy. Next item on the agenda is the approval of the September 24th, 2019 minutes.
Second.
Got a motion and a second. All in favor?
Aye.
Aye.
All right. Any opposed? Motion carries. Next item on the agenda is Ms. Wharton, our CFO, introducing Mr. Miller Edwards, CPA shareholder with Malden and Jenkins LLC. Amy, take it away.
Good afternoon, council members. I just want to say what a great job my staff has done this year and for the audit, and thank them. Thank our auditors, Miller and Grant, both for all the help that they gave us. And with that, I will hand off to Miller Edwards with Malden and Jenkins.
Well, good afternoon, everyone. Let me see if I can share a screen. Bear with me, see how this works. Not seeing what I want to see. There it is. Okay, can you all see what I've got on the screen now?
Yes, sir.
Yes, sir.
Okay, excellent. All right, well, again, what I'm here to do today is to present to you a summary of the annual audit of the city of Charleston. Of course, you all have a 12/31 year end, and I'm happy to say the audit got done in due time and has already been filed with the respective parties. And the purpose of today's meeting is to visit with you all to share any kind of information I can possibly enlighten you with, as well as answer any questions that you may have. With that being said, I'm going to go ahead and start scrolling through the presentation, but if anybody's ever got any kind of questions, just interrupt me and ask away. So again, going to the first page, of course, the purpose of today's meeting is to just, again, enlighten you some things relative to the audit process. Tell you a little bit about our firm that you've hired to do the annual audit for the last several years, talk about the annual comprehensive annual financial report, otherwise known as a CAFR, talk about our audit opinions and any kind of financial statement highlights and any other communications that we as your auditors need to communicate with you all, and talk about maybe some new standards that will be coming down the pipe in the next couple of years. With that being said, I won't bore you with all the details, but we are a large firm here in the Southeast. We have offices in 8 different locations, including in South Carolina. Our largest niche is serving local governments. We serve about 500 governmental units every year. We've also got 131 clients, such as yourselves, that get the GFOA Certificate of Achievement Award, which is something that I think you all should be very proud of. And one last thing I want to share with you is this party that writes all these standards that makes life so interesting for local governments and state governments is called GASB. And now the chairman of the board of GASB is one of our partners by the name of Joel Black. So we're very proud of what Joel's been able to accomplish on behalf of himself and the firm. We also serve a lot of cities and counties. This particular slide gives you a taste of some of those cities and counties that we serve. I think on that slide, it includes 8 cities in South Carolina that are of good size and nature, along with 8 counties in South Carolina. So we've got a pretty good operation going on in South Carolina. And again, appreciate the opportunity to be of service to you all. As far as the audit opinion goes, I just want to touch on a few things. Number one, you've asked us, the governing board have asked us to come in and to attest as to if the financial reports and the financial numbers are indeed correct. And our job is to do the testing and do all the different efforts that need to be done to be able to express an opinion on these financial statements. We do follow government auditing standards, which is the term GAS that you see there. And I'm happy to be able to tell you the number one thing you'd want to know, and that is that these financial statements do present fairly in all material respects your financial position and results of operations for the calendar year 12/31/19. That's always what you want to hear from your auditor, and we are able to give that to you today. Additionally, as you know, local governments oftentimes receive a lot of federal fundings from different agencies of the Fed. This past year, you all took in about $8.5 million worth of federal funds. And as everybody knows, those funds come to you with a lot of different strings attached and a lot of different rules that have to be followed. And we looked at all the different programs, and we looked at the situation existing at Charleston, and we were able to only have to pick one major program. Sometimes we have to pick 2 or 3, but this year, due to a variety of things, you all had only one of your programs tested. That was your Homeland Security Disaster Grant that you took in about $2.8 million. And I'm happy to tell you that we were able to give a clean opinion on your use of those funds. You dotted all I's and crossed all T's and did exactly what you were supposed to do with those particular federal funds. So that's always good news as well. So again, on both the compliance side and on the financial side, we're able to give you clean opinions, which is exactly what you want to hear from your auditor. The next thing I was going to touch on was this thing that we refer to as the CAFR. You heard me touch on that earlier. You all have been getting a CAFR award from the GFOA for quite a few years, and I'm happy to say you got it again this past year. Your 12/31/18 CAFR was presented to the GFOA, and they granted you the award for 2018. We've also, the city has also filed that with the 2019 audited CAFR with the GFOA, and I'm guessing you'll probably hear back from them sometime between 6 and 9 months from now. And I fully expect you all to get recognized again for their certificate of achievements for excellence in financial reporting. So again, as Amy spoke early on when we first got this meeting started, you've got a good staff, you've got a good group of people, they do a great job, and you should be quite proud to be one of those cities that gets this kind of recognition. So again, hats off to you. Looking at the numbers, I know I'm an accountant and numbers get me excited, but oftentimes they get other people sometimes confused and trying to figure out what's going on. Is it good? Is it bad? Let me just kind of in my own highlights express to you that I see you all as a pretty good size, large local government. When you think about it, you all have got about $1.5 billion worth of assets. Now, that's not cash. I want to make that real clear. You've got about $1 billion worth of capital assets, all your infrastructure, all your facilities, all your equipment, all those things is about $1 billion worth of your $1.5 billion in assets. You've got about $560 million in liabilities. Some of those are short-term, some of those are long-term, but nonetheless, it ends up giving you an equity, or what we call a net position, of about $980 million. So you can look at that right there and see that $980 million is approximately what you've got in capital assets. So you have to look at it and think about what you've got for liquidity when you look at your position. I think you look pretty good. You've got about $500,000 worth of liquid assets, but you've got about $500,000 worth of current liabilities and long-term liabilities. But you've got a good looking balance sheet there. It's definitely of size and nature. Additionally, when you look at everything under the umbrella of all the funds, you know, the city, like a lot of cities its size, has a lot of different funds. But when you roll them all up, you look at it and you all had about $386 million worth of revenues. That's a large government right there. You had $281 million of expenses. And when I say expenses, these are things that you deduct as part of the income statement. That means that you had a bottom line of $105 million. Now, some people might look at that and say, holy moly, why are we getting a bottom line of that kind? Well, that's because when you go to the next slide, you'll see where I'm reconciling that $105 million to what you really had in cash flows for operations. When you look at the $105 million, if you add a few things and subtract a few things, you came down to about $2.1 million use of funds, meaning you had expenditures greater than revenues, about 0.5%. So that's not bad at all. The $105 million, when you reconcile that, you add back the expenses of depreciation. You add in there the proceeds you got from long-term debt, which is not something we treat as revenue, even though it's a funding agent, it's not revenue. Additionally, you subtract from that your principal payments on debt. You don't expense that on the income statement. You do that as part of this reconciliation. But the big number was the $97 million that you all used to purchase and construct capital assets this past year. And as I put off to the side there, you're spending about $8 million a month on your infrastructure, your facilities, all the different capital products that you all have. That's having to be funded from operations as well as some of the proceeds from long-term debt. You also had about $28.5 million of net capital project fund activity. And what I mean by that is you all basically saved up some money this year from your capital project funds. The biggest one was for the International African American Museum Fund that you got. I think that was a large amount of that $28.6 million. But those are funds that you didn't use in this past year's operations, but you will be using those going forward with all of your capital projects. So when you look at it, the 105 million ended up reconciling down to a negative 2.1. That's why I don't like people to look at the number on the front and say, gosh, we made 105 million. But that's because there's a lot of things that you spent money on that is not deducted on the income statement. They're deducted as depreciation over the years that follow. So that gives you a little bit of a reconciliation of the entirety of the city. That's parking, that's capital projects, all your special revenue funds, your general fund, everything under the sun is part of this operation right here. Going to the next slide is the general fund. And I try to give you a summary of what we've got for the general fund. You've got just short of $115 million worth of total assets. Now, of that total assets, about 42 million of that is cash. You've got about 22.6 or 22.5 million of liabilities, giving you a fund balance of 92.2 million. Now that gives you about 175 days worth of coverage when you look at what your expenditures are. Oftentimes people ask me, what's the right level of fund balance? With it being a 12/31 and property taxes have been collected during the fall, I think you're right where you ought to be at 12/31. More than likely, if you would ask Amy where you all are today, it's a lot less than 92.2 million because you've had to go through the lean times of the summer, not to mention this pandemic that we've had to be going through. It speaks quite highly of you to be able to have 6 months worth of fund balance as of 12/31. And I think you will see this is real important to have those kind of reserves so that you can get through lean times like we're going through now, so that you can withstand, you know, hurricanes and other kind of things that Mother Nature might throw at us, recessions and that kind of thing. It's very good that you had the strength that you did at 12/31/19. The general fund took in about 187 million of revenues, and it spent about 190 million on expenditures. That was about a $3.5 million decrease in fund balance before you got some transfers from other funds. You had transfers of other funds of about 19 million. A large part of that, as you know, comes from your parking. Parking transferred out about 11 million to other funds this year, and that is by design, of course. So that's a quick overview of some of the numbers on the general fund. I've also got some pie charts and things to share with you. When you look at the general fund's revenues, notice the big giant green slice. That's property taxes, which represents about 45% of the general fund's revenues. You've also got licenses, fees, and permits that represent about 32%. And then in blue, you've got intergovernmental, which is mostly having to do with your local option sales tax, your loss funds, and that's another 17%. So real quickly, if you take those three slices alone, that's 94% of your revenues at the general fund. So, you know, a lot of things going on there as well. Going to the next slide, you can see the expenditures. As expected, a city of this size and nature, public safety, that's of course police, that's fire, and a few other things. Public safety was about 50% of your overall expenditures of the general fund. Again, that is not a surprise. I see that in most places that I go. Oftentimes that can range from the early 40s to the late 50s as far as percentages of total expenditures, and you all are right there in the middle at 50%. So that looks like I would expect it to. But that gives you a little bit of a breakdown of what we've got when you look at it from a pie chart standpoint, both for the revenues and the expenditures. Another chart that I'd like to go through is looking at your general fund revenues, expenditures, and all these transfers, and give you kind of a picture of what you've been doing the last few years. Back in 15, 16, 17, 18, and 19, you can see that just about every year, the green bars, which are your revenues and other sources of revenue, outweigh or exceed your red, which is your expenditures and other financing uses. That is a good trend to have, I would say. This past year, you had a pretty good margin between the two. That's the 2019 bars that you see there. But again, it's very important for governments such as yourself to have these kind of years so that we can withstand years that like you may be going through right now during this year, calendar year 2020. Another picture of the same kind of information is just another graph that shows these are the layers that you've added to fund balance over the last 5 years. You've added to fund balance about 50% of what's currently there. Remember I said you had about $92 million worth of fund balance? You have socked away about 46 million of that. About 50% of your fund balance has been created and established in the last 5 years. So it's been very good 5-year period that you all have had when it comes to your general fund and its overall operations. Another thing that I like to look at when it comes to the general fund is what kind of coverage do you have? You heard me mention earlier about 175 days, and this is my attempt to explain to you what I mean by that. If you look at the red line, you can see the trend of what we've had for expenditures over the last few years. If you look at the blue line, that's been your growth of fund balance over the last few years. And your ending balance is 92.2 million. If you compare that 92.2 to your total expenditures of 190 million, that gave you about 175 days worth of fund balance. And that's a good margin to have. You've maintained something very similar to that over the last 5 years. And as your expenditures have grown, so has your need for establishing and creating additional fund balance. So again, you can see the relationship there for the last 5 years. That covers the general fund. I was going to touch on some of your other major funds. You've got a capital improvements fund that is also considered to be a major fund of the city. You've got about 47 million in assets. A great deal of that is cash. You've got about 9 million of total liabilities, giving you a fund balance of 38 million. You took in about 16.5 this year, and you spent almost 20 million on different capital projects. That gave you a decrease to the fund balance there of about 3.4 million. But again, these capital projects funds are meant to be spent on capital needs, not on just general operations, but on building facilities and infrastructure and all those kind of things. And just in this fund alone, you all spent just short of 20 million on that, on the aggregation of different projects. You've also got the King Street Gateway Tax Incremental Financing District Fund. This year, it's got about 45.5 million of assets, 45 million of fund balance. It took in just short of 10 million and spent about 3.6. It gave you a bottom line of 6 million increase in fund balance. And of course, you all have plans going forward of spending these layers of funds that you've got right here on various capital projects going forward. So sometimes with these kind of capital projects funds, you have years of growing them, and then you have years of spending them. I would not be surprised at all in the future when I look at these capital project funds to see that you're spending more than you're taking in. That's by design. You're trying to collect the monies before you start spending them. And I think that's a prudent thing to do. Another capital projects fund that you've got is the drainage fund. It's a stormwater type fund, 42 million of assets, 34 million of fund balance. This year, that fund took in 22 million and spent about 27.5 for a decrease of $5.1 million. So again, it's working as designed as well. You've got the International African American Museum. This one is one of those, like I said earlier, sometimes you aggregate money, you collect money on the front end, and then you start spending it. This past year, you all took in about $47 million. That included some proceeds from debt and other things, about 12. You only spent about 12 million, but that gave you a change and increased your fund balance of about 35 million. And of course, you all know that you've got big plans of how you're going to be spending that money in future years relative to this overall project. So you're in a good place there. You've got some good, strong funding right now for that particular fund. You've got other non-major governmental funds when you look at the rest of the city, and you've got about 161 million of assets offset by about 15 million of liabilities. All these other funds that are governmental in nature that I've not covered thus far give you a fund balance of just short of $146 million. These funds took in about 94.5 million, and you spent about 77.5 million on various projects and other operations. You also transferred out about 23.9 million to other funds out of these. You ended up with a $17.2 million increase in fund balance. Again, these funds are operating as designed. They're doing exactly what you want them to do. When you look at your parking facilities, this is really your one and only large major fund in the proprietary environment. Proprietary meaning that you charge a fee for certain usage, and then you continue to spend that money on those particular proprietary activities and potentially transfer monies out to other funds. This one again is operating as designed. You took in about 30 million this year in parking associated revenues. You spent about 26 million. That included transfers out to other funds such as the general fund of about $11 million. You had about a $4.1 million increase in net position. You did have cash flows that were negative, meaning you took in certain amounts of cash and you spent certain amounts via cash. And on a cash flow basis, you actually had a decrease in cash flows with about 900,000. Again, the kind of numbers that I would expect. One thing to take note of is you spent about 5.3 million just on capital assets. That is all the enhancements you're doing to the garage and facilities and all those different things. and equipments that are part of those operations. Again, along with those funds we talked about earlier, that $97 million that you spent, that included this $5 million here on the parking side of life. So again, all these funds are doing what I would expect them to do. Stepping away from the funds themselves and just looking into other elements, one of the things that I think should be of interest to you all is looking at your pension plans. Now, of course, you all participate in the state plans of the SCRS and the PORS. Interesting thing there is when you look at the dynamics of what you've got for liabilities and assets relative to those plans, you've got the SCRS where you've got 106 million, but the liability is about 196, giving you a deficit of about 89 million. The PORS is similar. It's 167 million of assets, 267 million in actuarially determined liabilities for a $99 million deficit. What we have here is, or not a deficit, well, yeah, deficit. What we have here is we have some funds that right now together are only about 59% funded of the pension plan. I share this with you. This is not something that the city of Charleston created, but this is something that PEBA has created, this situation to where you all are 59% funded. When I say you all, everybody who's participating in the PEBA and SCRS plans are 59% funded. This gets back to some thoughts that I've shared with you in the past that I would expect you to consider going forward. I fully expect PEBA to come to you all for additional funding in future years, because they're going to probably want to see that 59% raised up to being something more around the 70, 75%, which is what we see most governments with their pension plans have as far as a fiduciary position. Again, yours is a little bit low overall, about 15 to 20% lower than maybe other plans. So expect to hear more news regarding increases in your cost on those PEBA plans in the next few years.
Hey, Bill,
yes.
This is Peter Shade. Is this the problem that we have because of the state, I hate to use the word, mismanagement of those state retirement funds? Is that the problem we're having with this?
Well, you know, I'm going to try not to use the word mismanagement, because this is something, of course, that's gone on for a long time.
Right.
But, you know, what PEBA is supposed to do is take in funding from parties like yourself. They're supposed to invest those funds, and they're supposed to be trying to invest and collect funds from you all, from all communities that are participants, to be able to have a well-funded pension plan that can cover actuarial liabilities. Right now, you know, you could look at this and say PEBA is a little bit under what it should be. Again, most of our clients are around 75 to 80% funded with their pension plans, and you all are just short of 60 at 59% overall. So, you know, this probably didn't happen overnight. This is probably something that happened over a long, long period of time.
Right.
And I'm just telling you, because of the way GASB 68 has elevated this situation to be something that we now have to include in financial statements, I'm betting that PEBA is going to want to see this get better, and they're going to come to all the participating governments such as yourself and start asking for increased funding going forward. Don't be surprised. I know they've already been doing it. They're probably going to keep doing it. It's going to take a long time to correct this situation, I would say.
Right, and we are been contributing to that shortfall over the past at least 4 or 5 years, haven't we?
Yes, exactly.
Yeah.
And my point is, I think you're going to continue to do so. Don't be surprised if the increases of the past few years get even greater going forward. So this is one of those little liabilities that I say little, it's your largest liability that you've got, but this is one of those type of things that you're going to be having to participate in going forward. If PEBA is interested in pulling themselves out of this hole that they're in and standing a little bit taller in this market.
So what are you thinking is going to be our increased contribution? What percentage?
This gets back to their management style. Maybe I'm kidding myself. Maybe they're not worried about it. Maybe they're okay with being 60% funded across these plans. Most governments that I see are not happy at 60%. They're worried about postponing this cost to a future generation. And so most governments are trying to do what they can to raise the bar on that relationship.
Yeah, and with this COVID-19 issue lingering around and cities like ours looking for other forms of funding, this is going to be across the board issue that we're all going to be facing, sounds like.
Yes, I would agree very much.
Thank you so much.
Absolutely. All right, continuing on to the next slide. As I mentioned in one of my opening slides, one of the things we're here today is to share with you any kind of required communications. What I mean by that is auditors are supposed to communicate to governing boards such as yourself if we had problems that we need to make you aware of, if there were some kind of independence issues or any kind of significant audit adjustments that we had to make that were problematic for us, if we had to go outside and get some kind of consultation from a specialist out there that was unique. And I'm happy to say we have nothing that we need to share with you this year that I would consider to be a required communication. As Amy said earlier, and as I think all of you all know, as evidenced by the reports themselves, you've got a really good staff. They're very proactive in doing the right things and doing things right the first time. And I'm happy to say we did not have anything that warranted some greater communication to you all or to the mayor or in any such matters during this audit. So that's a good thing to hear if I'm in your shoes. There are a lot of new financial reporting standards. Some of them have been postponed with this COVID pandemic. Several things were supposed to be done this year and next year, and now they've been postponed a year or two. But that being said, you've got a lot of new ones out there. This is only a few of them. There's actually 97 GASBs out there now. That is 97 standards. So I didn't list 4 of them, but because they're a few years out and they may or may not be effective relative to the city. But these we do believe are of interest to the city. Debt disclosures and lease accounting will be out there. Conduit debt potentially needs to be addressed as far as financial reporting disclosures and the recording thereof or not. So these are things that are going to be coming down the pipe in the next few years. You can see where I've got some of these dates. Each of those dates got postponed. Well, they've been postponed a year. Like debt disclosures were supposed to be 2019. That got postponed to 2020. All this kind of got a trickle back effect with this pandemic. So GASB actually had some compassion for local governments and state governments during this pandemic and postponed some things, but they are coming nonetheless. That being said, that pretty much covers what I wanted to cover with you all today. I tried to present you all something that was kind of in layman's terms and hit the highlights, the kind of things I'd want to know if I were in your shoes. But that being said, if there's any questions from any of you all, I would do my best to entertain answering them today. Or if you'd like to meet with me individually sometime going forward, I'd be happy to do that too.
Thank you very much, Mr. Edwards. Does anybody on the committee have a question for Mr. Edwards at this time?
Mr. Chairman?
Right. Yes, sir.
Chairman, I would just like to echo the remarks that have been made about not just the staff, but their leader as well, Amy Wharton. They've really done a remarkable job, as Miller has indicated throughout. The numbers, I think, kind of speak for themselves, but to have a clean opinion with an award for excellence and no required communications. Don't get me wrong, we like talking to you once a year, Mr. Edwards, but having no required communications in addition to all the other compliments and accolades, I just think it speaks volumes about Amy and our team at Budget and Finance. Thank you all.
Absolutely.
Thank you, Mr. Merritt. And I certainly echo those concerns. I've looked at CAFERs from other jurisdictions over the years, and this really stands out as an exceptional product and really a testament to the city of Charleston's sound financial planning and responsibility over the years, which I cannot take credit for because I just got here. But I certainly continue that tradition in the coming years, especially given the challenges and constraints that we're facing as the local government dealing with this new world of ours. So unless there's any further discussion necessary, Councilmember Shade?
Yes, sir. And it goes without saying that Amy has done a wonderful job with her staff and always appreciative for the level of professionalism and diligence. But Miller, going forward, when we come and meet with you again a year from today, we are looking at our tightening our belt and making adjustments, expecting a huge revenue shortfall, and not aware of what the federal government may do to help local governments out. What advice would you give us as going forward to make sure that we're pretty close to the same position we're in in today that we will be in a year from now?
Well, that's a very fair question. Unfortunately, it's got a lot of intangibles and a lot of what ifs involved in it. This pandemic is costing every local government right now. Every local government, every state government is having increased cost to take care of the situation that exists as of today. Unfortunately, there's not necessarily increased revenues. What we're seeing across the board is a reduction of sales taxes. We're seeing a reduction of a variety of different taxes. I think one of my biggest concerns is property taxes. When I go back and I think about the Great Recession that happened back in, what was that, 07, 8, 9, and then it lingered on into 10, 11, in some cases even 12. You know, there's going to be a property tax matter where you're going to see a lot of businesses that are going to struggle. You're going to see potentially real estate suffer. And if property values go down, it's going to create strife for individuals, businesses, and the governments that are there that are using those values for property taxes and those kind of things. That's going to have a long-term lingering effect. I don't think that's going to be something we're going to feel necessarily even this year, because your market values have already been established. But you're going to have market values that are going to be affected going forward in future years. That's going to create a little bit of strife for the city itself as it goes through 21, 22, 3, those kind of years, just like the Great Recession. The one thing I would say to any government is learn from the past, and that is, when you've got this type of situation, tough decisions have to be made, and it's going to be important that we try to spend on routine expenditures what we have as far as routine revenues, meaning if you collect property taxes, sales taxes, that's routine fundings. That's what we need to be monitoring so that we can properly spend that money on routine expenditures. Non-routine expenditures need to be funded by non-routine revenues, such as grants and bonds and those kind of things that you might need to go out and go get funding for. Otherwise, what you're going to find yourself doing is having to use fund balance. Now, the fortunate thing is, as of 12/31, and again, I don't know what it looks like right now as of 7/31 or this date of 8/18, but as of 12/31, you were in good position. And I cannot stress enough how important it is that those 5 years that we talked about, where you've actually added a 50% of your layer of fund balance has been created in the last 5 years. Imagine if you had not done that.
Right.
And that's something we've got to always keep in the forefront of our mind. We're going to get through this pandemic. I honestly would expect you all to have a reduction of fund balance like 12/31/20. I think it'll be amazing if you all don't have a substantial reduction. I think it's just the nature of the times that we're in right now. But fortunately, you have the wherewithal to do that right now and be able to use those reserves. Just make sure that you don't use the reserves on routine expenditures for too terribly long before you address having to tighten up that belt even tighter. I had a lot of governments back in the previous Great Recession that seemed to think that the recession was only going to last maybe a year. And so they just spent reserves on routine expenses. And then guess what? We had another year, then another year, and they didn't tighten up the expenditures quick enough. And they ended up watching their fund balance just erode away. That's going to take some real tough decisions and some significant effort going forward if this pandemic's effects linger like I personally think it will for a couple of years. There's a lot of concern out there by local and state governments. And it's something we need to make sure we address today. Any kind of spending that we don't have to do today, then let's don't do it. Let's postpone some projects if we need to postpone projects, and let's assess things today, and let's don't wait until 2021 to start assessing things. So that's the only thing I can really tell you right now relative to this situation.
Good advice. Thank you, sir.
Yeah, I appreciate that insight as well. I think that's good hearing from an outside source. Thank you.
Yes.
All right, thank you, Mr. Edwards. Does anybody else from the committee have any questions at this time for our auditor? All right,
Chairman, do we need
Yes,
a
sir.
motion to accept the audit as information or anything like that? Amy?
I so move.
This is Jennifer. I think at past meetings, we typically don't take a vote on the external audit. It's just the internal audit that the committee votes on.
That's correct. Coming up next.
All
All
righty.
right. What a segue to item number 4 on our agenda, the presentation of the external audit work by Malden and Jenkins LLC. And I assume Mr. Edwards will be handling this as well?
No, sir. That's going to be the internal audit, I believe. We've just presented the external audit just now.
Oh, correct. Oh, that's right.
At this time, we usually go ahead and exit the room, and I'm going to go ahead and leave it with y'all. But again, if you have any questions, if anything comes up, just give me a call. I certainly appreciate it.
Thank you, Miller.
Wonderful. Thank you for all your efforts there.
Thank you.
Robert Majernik is here, and you can call on him.
Got it. That's right. That's right. Mr. Majernik, we're happy to hear from you. Thank you.
All right. Good afternoon, mayors, members of council. We have issued our accomplishments that was provided on your agenda late last week. Last year, we had 15 audits on the agenda for the year. We completed 5 of those, mostly because we had one that you guys were all very familiar with that took quite a few months. So that kind of put us back a little bit on what we intended to do, but we have added some of those into our 2020 plan. So those will be addressed this year. In addition to the 5 audits, we had 15 special requests and 16 hotline calls. Most of those were helping other departments, but 4 of those were investigative or related to fraud within the company. Those were all relatively small things. A couple of them, there were some small thefts, but nothing to note of any value. The number is all detailed in the report that you guys have received. We completed all of our special requests and hotline calls for the year. Overall, last year, we spent 88% of our time working on audit work, 8% on admin work, and 3% on continuing education to keep up licenses. I or my replacement, presumably later on this year, will start working on the audit plan for 2021 in December. So any suggestions you have would be welcomed on that. With that, I close my report unless anyone has any questions.
All right, thank you.
Thank you.
Do we have a second?
Second.
All right, is there any discussion or any questions on this matter? Councilmember Griffin.
I just want to thank Robert for all his many years of hard work with the city. And we'll be very, very lucky if we can find somebody who is half as dedicated and hardworking as you this next time around. So thank you for a wonderful job. And thank you for coming back here today to help us wrap up 2019.
I appreciate that, Councilmember Griffin.
Councilmember Jackson.
Thank you. I would second that. I'm sorry that my power went out, Mr. Majernik, so I couldn't hear a lot of what you opened up with, but we do wish you well. We do miss you. We do respect all the work that you've done. And I just want to say you have great taste in music too.
Thanks so much.
Nice. All right. Anybody else have any questions or comments or other matters at this time? Mr. Mayor.
So I'll add my thanks to Robert as well, particularly for his service with our customer service initiative over the last few years. That Robert really was attentive and helped motivate city and Charleston employees to be creative and to provide good customer service. Thank you for that, Robert. And I think y'all know he tendered his, gave us his intentions earlier this year about leaving the city to practice privately. And he's been willing to stay on for all the things that we kind of really needed in this interim period. I did interview someone yesterday who I hope will be successful in obtaining this position. So thank you, Robert, for your service. I appreciate it.
Thank you, Mayor.
All right. Well, thank you, Robert. You know, we didn't get a chance to work together all too long, but I did enjoy and appreciate our interactions. And I would just maybe ask, do you have any recommendations for us sort of on the way out based upon your experience we can take into account as we continue to navigate and build on all of the success that you've instilled over time?
I don't have anything in particular, but I'm certainly willing to stay on and help train the next person so they're up to speed and ready to go from day one.
Great, great. Well, good deal. Well, thank you so much, sir. Anybody else have any questions or comments?
Robert, just thank you for everything that you've done for the city the past several years since I've been on council, and best wishes to you, sir.
Thank you.
Absolutely, absolutely. Well, good deal. I believe we have a motion to accept the internal audit on the floor. So I'll call for a vote. All in favor? Please say aye.
Aye.
Any opposed? All right, the ayes have it and the motion passes. Thank you again very much, Robert. Really appreciate it. And we will move along as we are bearing down on 4:30 here. Agenda item number 5 is any other business. Does anybody have any other items to bring before this committee at this time?
We will be adjourned.
Second.
All right. All in favor?
Aye.
Aye.
All right. We are adjourned, and I will see
Thank you,
everybody
Mr.
at
Chairman.
Ways and Means.
Good job, Mr.
Thanks.
Chairman.
It didn't burst into flames, so we got the first meeting under the belt.
There was a lot of
Thank you.
lightning and thundering going on behind my head though in downtown Charleston.
That's right. I'm glad our audit was clean. We didn't have to do too much cleanup. That was great.
Great. See y'all in a minute.
All right. Thanks, everybody.